13 Fs are out. If you would have had to guess one stock that Warren Buffett would not buy, you might want to guess Taiwan Semiconductor. Wrong. We got to talk about that. China's on fire. Great numbers from Walmart. Home Depot, good numbers. A little worried about full year guidance. We got so much to cover. I'm going to have Mitch run the intro. We're going to get to it. Gordon Johnson coming on at 8:30 to talk about Tesla and Bitcoin.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors around the world. Welcome to the Tuesday's crazy show. We're up 41 handles at 4007, clearing that psychological 4,000 level. Don't ask me based on the close, man. I was looking to short market overnight, but that was not the move. Dollar down 55 cents at 105.98. TLT traded up 86 cents at 98.51. Crude down 64 cents at 85.23, but don't tell the oil stocks that. Gold marching towards 1,800, up 260 at 1779.40. Silver flirting with a close above 22. Another close above 22. It's down 9 cents at 22.02. Bitcoin, is it building the base at 15,000 for a move to 18? Or are we just going to sit here for 2 or 3 weeks? Ethereum futures, they're up more on a percentage basis. They're up $57 at $1,250.50. Triple D, I mean, sometimes I worry about you. And I was just a quick moment from yesterday. I was worried about you in JPMorgan at about 4:15.
Me too.
What the heck happened there?
I was worried about me and JPMorgan too. Somebody wanted out, man. I've never seen any news on this, and it's all the way back, but they were selling JPMorgan like it was going out of style. It was just kept coming in with big size and dumping, and I'm like, what's the news? You know, Charles even was squawking, JPMorgan going down, not seeing a headline. I was like, I don't see any headline either, but JPMorgan went down, you know, it was down $1. Then it was down $2, and it's down $2.50. I'm like, holy, it must be some bad news for JPMorgan to fall $2.50. We never did see the headline. I think it was just somebody just wanted the hell out, and they were just dumping nonstop. And it was some size, Joel. It wasn't like, a couple hundred shares. There was tens of thousands of shares going off down there. So I bought it because I didn't see the headline, and then it kept coming in. I was like, I'm in trouble here. There's obviously a headline. You can kind of tell when it's news. It looked like news. It smelled like news. I don't think it was news. It looks like it was this, and then it just was gone. And then it's tried to claw its way back, and it's been trying to claw its way back. But there's a lot of people that bought the stock down there, so they're all up money dumping stock too. So I don't know. It's still in the red slightly, but I never saw the headline on JPMorgan.
You know what? Could it be a fat finger, or maybe
wasn't
there
a fat
was
finger because it kept coming back, Joel. Maybe you do a fat finger again and again and again and again. It could be one person. It could have been one institution that was just dumping, but it definitely wasn't a mistake because you don't make the mistake 5, 6, 7 times. The size would come in, boom, for 20,000, and then they're coming in, and then it trades out, and then they come with another 20,000. Somebody just wanted the hell out of JPMorgan. They got out,
or maybe there was and maybe the order was supposed to be on the books for tomorrow or something, you know, like for the open, and they put like after hours. But anyways,
maybe
we
didn't realize that you don't have to go down $2.50 if you trade an intraday. So institutional traders out there, you trade in after hours, go a little easier. There's not that much liquidity. You want to get out of 50,000 JPMorgan? Don't do it after hours. Do it when the market's open. But I have no idea what's happening to JPMorgan. I did not think we were going to start with that, though. There was so much other news, but it was interesting last night. Where do you want to start, Money Mitch?
Just to let our people know that we're looking at the markets for them 24/7. and that we're here. Pre-market prop
stuff.
starts at 4 minutes and 1 second. But Money Mitch is back there. He's in the background. He's ready. He's going to lead the show, and you and I are going to behave, and we're not going to go on too many rants.
Very behaved today.
Yep. Let's get him in the line. Let's go. Let's get it. The Fed talk today. Definitely watch out for Fed talk. I just want to mention that right off the hop. There's going to be a lot of Fed talk today. Waller talked yesterday, said that the markets were pretty much overly optimistic and should brace for higher rates. Of course, that was the bear Waller there. And then Brainerd coming in and she came in with, of course, a contradiction that the central banks could ease off the rate increases. So, of course, we're getting some more talk by the talking heads, the Fed. Today, we'll get even further talk. You'll get Harker. You'll get Fed Governor Lisa Cook. You'll get Fed Vice Chair for Supervision, Michael Barr, set to speak at 10 a.m. today. So there's going to be a lot on the tape today. Just stay tuned. There could be some swings around in the markets. And, of course, PPI. Yeah, of course, PPI today at 8:30. We'll be ready for those numbers. I have the estimates right around 8:25 or 8:20. We'll start getting into the focus of the economic data coming in. Of course, team, I got you. I got your back. We'll be ready for that number. Let's get into Warren Buffett. That's definitely the top story today. Let's talk about it. Warren Buffett disclosing here $4.1 billion stake that leads to an 8% spike in an Apple supplier stock. And like Joel mentioned, wouldn't you know it? Taiwan semiconductor manufacturing companies here jumping on Tuesday after billionaire investor Warren Buffett's Berkshire Hathaway disclosed a new $4.1 billion stake in the company, 60.1 million American depository receipts for TSMC. And then this also disclosed some other kind of stakes that Warren Buffett has right now, which is a $297 million in building material company, Louisiana Pacific Corp.
Why don't we do that? Let's do the TSM first, and then
definitely. I just wanted to kind of mention these. I didn't know if you guys really wanted to go through them. But
I like them all three together because we cover more stocks.
Okay.
Mention the last one too. It's Jefferies is the last one.
Jefferies Financial Group.
Stakes.
All right, so let's run through it. Let's first start with, of course, what everyone wants to talk about, which is TSM. I'm going to go right off the hop here. Yes, I'm going to go and say it. I personally think this is an error of judgment here of Warren Buffett going for Taiwan semiconductor manufacturing. I think it makes sense in the fundamentals. But if you start looking at what Warren has always preached, which is diversification, I think personally he is getting further and further away from the things that he preaches, which is being diversified, which is being in a kind of area where you can't get hurt by just one company. I think this position going into an Apple supplier stock just shows me more and more that he's getting further and further, not diversified, but going all in on Apple. And so in my eyes, I think this is personally a mistake, but Warren hasn't lost before. So we'll have to wait and see what happens with this position.
Mitch, I agree. He's got such a huge stake in Apple. I don't understand why he has allowed Apple position to become this big in his portfolio. I know he doesn't like to sell, but come on. I mean, when you're talking over 40% of the fund, you're not diversified anymore. And then he's loading up their supplier too now. I completely agree. I don't know what he's trying to do. Is he trying to create an Apple single stock index here? Because that's what all this stuff is related. Obviously, the Taiwan invasion, me and Money Mitch have been worried about for a long time. Doesn't look like it's on the table for now, at least with the Biden visit. And that's not imminent by any means. But I agree. I mean, he is not diversified. If Warren Buffett called Jim Cramer on Mad Money and gave him his positions and the percentages, I think Cramer would have to say you're not diversified. You're all Apple. He's basically half Apple. And then he buys Taiwan Semiconductor on top of it too. So I agree. I don't understand what he's doing either.
Well, like usual, he talks about
you guys both pushed the markets at 3,600 because you were worried about an invasion, China's invasion of Taiwan.
I'm still worried about it.
Do you think it's all him?
I'm still worried about it too.
All right. Well, You're missing out on one hell of a rally. I think that
Well,
I don't know if this okay from
you
Warren.
can say that. Stop. You can say that. We missed out on one hell of a sell-off too. I was bearish. I've been bearish for a hell of a long time, so I'm getting this from a lot of people right now.
Yeah.
Getting no credit for saying, "Hey, in November, in December, in January, in February, when I was sitting with a hell of a lot of cash, a hell of a lot more than now, I think I did pretty good this year. I think I put my numbers up against most people this year.
I've been bearish on
I missed the rally. Sure. I wish I could be right all the time. I wish I could be right 100% of the time. I wish that I loaded up before that CPI data point. I wish. But you know what? If I was right 100% of the time, I'd be the dictator of the whole world. I'd have all the money.
You make too, Dennis.
Nobody's
you are
right
so
100%
active.
of the time.
You are such an active investor. You are the way you move in and out of your portfolio. It's impossible to be 100% correct because you're so. I mean that you are in like the I won't say 99, but you are like such a different. Because you're in front of the markets all day. You're trading. You do different things. You have your CFA. You could do that, but most people, I mean, we'll trim. I take off certain portions of my portfolio. I put it on, but it's impossible to be as active as you are. You're gonna miss things, and I'll retract it. You did when we turned around off to before the CPI number. You said, everything, all the fundamentals are bearish, but the tape is bullish. And that's what you said. And you said you're going with the tape. But I mean, to call out the greatest investor of all time and say one of the greatest investors of all time and to say that he doesn't know what he's doing. I mean,
I don't think that's what we said, Joel.
I don't think
that's what we said that. Yeah, I think you're taking it way too far to the other side. But one thing I will say, one thing I will say though, and the chat is correcting me a little bit. Like always, Warren Buffett has said that diversification preserves wealth, but concentration builds wealth, right? May preserve wealth, but concentration builds wealth. So he's very mixed on that end, but he's concentrating in what he thinks is the best player, which is Apple. If you're in the camp that you think that Apple is just the best bet for the next decade, well then, you guys can just sit on Warren's camp and be set up there and look for Apple to continue growing. But I also think that Apple is way further down the business cycle than most look at it. And I think the iPhones is just the start of what's going to turn their company. I don't think they're going to always be able to diversify and be the best, but that's just what people think. And I think at this point now, this bet is dangerous because of that concern with China and Taiwan. I think that's why Dennis and I are really more concerned about this, because one negative factor comes in and this whole thing could get really ugly.
That's like not investing in the market because you're worried about COVID.
What's that, Joel?
I said you can't, if you make your investment thesis, your long-term investment thesis, if something bad might happen, then you must never, just don't be in the market. Just have 100% cash all the time.
So here's two thoughts on this. One is I'm an active trader. I'm sitting here as my full-time job. If I just bought and hold stocks, why am I not using an edge that I feel like I have? I agree. If you have a full-time job, you're a construction worker and you're working full-time and you just want to have your money in the SPY or you just want to have your money in there, leave it in there and it should build wealth over the course of the next 30 to 35 years. We do this show because people want to be more active in their investment management. It's why we do this show. So if you just want to buy and hold, there's no point to listening to this show. Go buy SPY, turn the show off, and go to your job. But if you want to get an edge, if you feel like you can do some market timing, and market timing is possible, I am living proof of market timing is possible. We've given out some great props before to some great market timers. Christian Fromhertz, I've mentioned Jeremy Newsom before. Fari Hamzei's an excellent market timer. It can be done. Fari. So I believe the people that are listening to this show don't just want to hear buy and hold, and that's all you need to do. If
they don't want to hear. They don't want to hear about the world coming to an end either.
I don't think that's what we're saying,
Well,
Joel.
nobody wants to hear that, Joel. And and if I was saying the world was coming to an end, I wouldn't own any stocks at all.
Yeah, then
I
we'd
wouldn't
be
be,
hiding in a cave.
I would, if I thought the world was coming to an end, I would cash in all my stocks. I would cash in everything, and I'd be doing some partying. I'd be, taking my kids everywhere around the world while it still existed. So I don't believe the world is coming to an end either. But I do believe there are implications for different events, world events. If there's nuclear war, we can forget about everything. So there's no nuclear war trade, because a nuclear war trade, just everybody dies. So we're not even worrying about trading off of that. But a Taiwan invasion has been possible for a while. I don't think that's imminent. It doesn't look like it. It looks like it's going the other way, and that's a good thing. So I don't think, we're talking about that. But Warren Buffett having all his eggs in one basket is very obvious here right now. So I agree with Mitch that I think that just adding to Taiwan Semiconductor was buying more Apple. So I don't get it, but at the same time, he's been the best investor, so I shouldn't challenge it. Maybe we'll just let Warren Buffett be. It's not like Cathie Wood, who is left up for challenging because she's had very poor performance. Buffett has been performing for a long time. It was one of the first books I read, The Warren Buffett Way. I have a lot of respect for Warren Buffett. I don't totally understand what he's trying to accomplish here, though, by buying Taiwan Semiconductor.
Yeah, I think what we're just trying to call out is the overexposure into one certain area. And that one thing that I think Dennis and I try to avoid often is being too much exposed into one catalyst.
Jay made a good point here. And mean, would you call, Bank of America, Coca-Cola, Chevron, would you call those like highly correlated companies, or would you call that diversification?
No, he's got a lot of stocks, but when you have 50%, so here's a lesson on diversification for everyone. You can have 100 stocks in your portfolio. If you got 50% in one stock, you are not diversified. Sorry, you're not.
I'll show this image here. This is from Wall Mind, so you guys can see the split of his pie and how his separation. That's all Apple. This side of the pie. That side of the pie takes a big hit. What happens to the price, right? And I mean, if Apple goes down, also Berkshire goes down at the same time, what's going to happen to the markets? That's why I just think it's just too much risk in one area. Then all these positions are like 1%, but Apple makes up 42%. That's just too much exposure in my eyes. I just feel
it doesn't look diversified to me at all.
Yeah, there's
and then
no
you add
diversification.
Taiwan Semiconductor into there, which 1.4. So yeah, 43, 44. I don't know. That's a big chunk. That doesn't look diversified to me. It looks like when Apple falls, significantly, your fund's getting hit. He's basically, and if you look at the correlation, if you watch Berkshire Hathaway now, when I'm arbing Berkshire Hathaway, I'm looking at Apple stock. So more often than not, if Apple's trading up 3-4%, Berk's up 2%. It's just like, and the ARBs have figured it out. The high frequency ARBs have figured it out too. He's just tracking Apple 50%. So there's other stuff. There's obviously other stuff involved in that. But, let's go look today. Maybe it's not working today. But Apple's up 1.56. Berk's up 0.9. I mean, the high frequency ARBs, me as well, it's just looking. He's tracking Apple 50%. So if that's what he wants
also,
to do,
we're totally discounting
fine,
if he has any hedges on this. We don't know if he, if he bought a zillion put or something. We don't, that's not disclosed.
Yeah, we do.
We don't know
what do you think 13Fs are for? That's nonsense.
They list all the options activity.
Disclosed. Yeah, it shows
options
it all.
Too.
13Fs will show what they've got and what they're doing. He can't hide options positions. You can't just go and I'm going to do all this and I'm hiding this off the books. It's Warren Buffett. He's not hiding anything. He discloses. He's out there. Warren doesn't hedge anything, Joel. He's long-term. He doesn't hedge. He doesn't think, COVID's coming and I start selling stocks. He might lighten up the airlines, but he doesn't go out and buy puts. He doesn't do stuff like that at all.
All right, team, let's move forward to the second stock here mentioned, LPX, Louisiana Pacific Corp. This is a building materials company, so moving a little bit away, and I think this is where I can start looking. And it's not like I'm completely against Warren, because I will be looking for LPX to get kind of a push today. Of course, it's already made a nice run here. Going to look for some pullbacks, probably around the 200 SMA for me, which is 61.29. We'll see if it's able to pull back today.
Just real quickly, we didn't give any technicals on TSM, and it hit 81.33, and it's just hanging at the $80 level. A lot of times for to investors, a lot of times these are a fade that there's anticipation and had a big run up into from that it takes out that pre-market high at 81.33, and then after that, I mean, dailies. That next target on the upside would be 82.50. And where I would have bought it is where Warren probably was buying it, between 60 and 65. So just wanted to give the technicals on that. Keep an eye on that pre-market high.
All right, let's go to that
here today.
LPX. No, I mean, I'll say it like I said it in the chat right now. We like to tell you how we see it, transparent or not, whether you believe it or not. Like always, this isn't financial advice.
Everybody's got opinions.
It's our opinion, and there's one thing that I think Dennis and I don't hide away. We're going to tell you what our opinion is. It's up to you guys if you guys want to listen to it.
That's
or
the
not.
point to the show,
and that's the fun discussion and the fun part of the Warren Buff run. Looks like it there. Let's get into the action with LPX now. What do you think about this one? This is at least outside of that realm. What do you guys think about this stock?
I mean, I just don't think chasing Warren Buffett, and it's not a Warren Buffett hate show. I love Warren Buffett. But when you're buying these things up today, you're chasing 10%. And I think Joel would agree with that because he didn't buy it at $65. He bought this thing probably at $55, so you're already buying it literally, 10 to 15% higher, maybe even 20% higher than Warren Buffett bought it. So you're not getting in just, and people who are just chasing these 13Fs and the algorithms that are chasing it are trying to flip it for a quick profit. But if you're a long-term investor and you're just like, I'm going to buy what Warren buys, you're always getting a worse price. If you want to buy what Warren buys, buy Berkshire Hathaway. That's a better play to play along with Warren Buffett. Not chasing Taiwan Semiconductor up 10% today, not chasing Louisiana Pacific up 10% today, not chasing Jefferies up 6% today, because you're not getting his prices. The way to get his prices is to buy Berk.B, and I won't argue on Berk.B.
All right, looks like you guys don't want to talk too much on LPX.
Just the technicals on this one. The technicals on this one, 65.74 was your high on August. This is technicals, a little easier setup on this one. 65.74 was your August high, and you haven't quite get there in the pre-market. Well, you got 65.70. So I like that level better than the 81.32 in semiconductor.
All right, and what about Jefferies Financial Corp? JEF.
I'm not buying any of these and chasing on Warren Buffett. Joel give me some good technical levels, though.
Yeah, it broke out from pair of highs at 37.70. So I'd be a little bit more of a buyer on a pullback there, as opposed to it's only traded a couple thousand shares. Your next monthly high is 39.68. If you're looking for another target on the upside, haven't taken out.
Joel.
All right, Joel. Yeah. Comcast, the Comcast life. It looks like we might have lost.
I swear he uses Rogers.
I swear he uses Rogers.
I think it's TradeStation. I think that there's something. No. Seriously, there's a
it's
bug
bogging
with
your computer
station.
down.
I'm telling you,
it's probably bogging your computer down.
That could be.
We'll work on it. We'll work on it tomorrow. I got you, Joel.
TradeStation. Sorry,
I got you, my friend. Let's talk about PPI that's going to be coming out here. It's 8/24. Don't want to miss this. We can give into some other headlines, but definitely want to go ahead and give the preview here. PPI month over month is going to be coming in for October. Estimate at 0.5, prior at 0.4. The year over year reading is estimate of 8.4, prior 8.5. And then the core PPI year over year is estimated at 7.2, and the prior was 7.2. The only kind of change you're seeing there is a slight tick. The month over month one actually expected to come up here, so we'll see what happens there. Year over year expected to come down 0.1. I always think that's an interesting outlook there, but we'll see what happens here when the numbers hit the tape. Will it move the markets? And it seems like the markets just want to hang on right now. I'm seeing kind of an hourly range between the 400 and the 395 area. We'll see if this continues to hold today, or maybe does this number shoot us through that 400? We'll have to wait and see.
It's
all right.
going to shoot us in one direction or another.
Yeah.
This is not going to be a non-event. This is going to be a major event, guys
I feel
and
it
girls.
too.
This is going to be a major move. If it's obviously a little bit hot, then be like, oh my gosh, the CPI was a one-off. And if it's not, if it's like a light number, be like, here we go. This is the second data point. The Fed follows the PPI, and they're going to pivot now for sure. So
what do you think
that's where we're at.
Go ahead, Joe.
Big number.
I was just trying to think what happened last month. Did we have the big move off the PPI? I know we had the big move off the CPI. I just can't remember if there.
That's a good question.
If there was,
Do you have the data when it was? Let's go with the tape. Tell the tape. Tape don't lie. Tape don't lie. Ball don't lie, and tape don't lie.
The 12th of October.
12th of October was a. That's when it came out. It was 12th of October.
Yes, the 12th of October.
It came out
the day right before.
CPI?
Right
that
before
was before CPI.
Yeah, it came out right before.
It came out the day before the CPI.
Yeah.
Is that right?
Yeah, I can show you right now.
Really?
I'm looking off of the
really.
You guys know how I do it.
Because CPI
was
straight
to the data. I go straight to the data here, so you guys can see here. I'll show you guys.
I didn't know that either. So it was a non-event last time. Then. That was the smallest candle ever.
Here,
I don't remember it being a non-event.
Yeah, it was the 12th. Wow, they did it before the CPI. Did they just do that? They just like change that up every month?
I don't remember that.
It's usually around the same week, but sometimes they change it up on the day here. The 12th.
Yeah, you're right. 15th. That was a nothing muffin day, and we rallied. The next day.
I never heard that one.
And then we came back down. So yeah, I was trying to think. It was maybe because it was before that, we didn't have, all the expectations that it was going to be, because of the CPI number. But all right, we got 4 minutes. Do we want to do any more 13Fs
Walmart.
or
Walmart?
No, I think you want to do Walmart right now, or do you want to save it for right after? I think we might save it for right after. Let's do Home Depot. That's a little bit smaller talk, I think, than Walmart, because Walmart has some news that we can get through there. Let's do Home Depot. Let's sneak that in here. Home Depot EPS at $4.24, beating the $4.13 estimate. Sales at $38.9 billion, beating the $38.01 billion estimate. Home Depot did reaffirm full year 22 guidance and sees comparable sales growth at 3%. This was a good call, I think, from you yesterday, Dennis.
Yeah.
I think you were looking at Home Depot and you said that this was one of those stocks that might have gone too far, too fast. And there you guys are seeing a little bit of a turnaround with the earnings.
Well, bar was raised. So,
and
a lot of these stocks have had raised bars now because we've had such a rally. So you come in here and you're like, wow, this is, if you would have reported 2 weeks ago when the stock was in the gutter, probably be a different reaction. But you come in, you beat, but the stock just ran up 10% in a week. So bar raised, didn't get over the higher bar. That's pretty much where we're at. They reaffirm. Then Walmart comes out. Walmart blows it away. So we'll talk to them afterwards. But I think the dip. I think they come in. I think everything. I don't even think I can't think anything for the next minute and a half because we got PPI coming in a minute and a half. So everything can change suddenly here. So nothing matters except the PPI now. Let's see what happens. And I'm going to go to the background too.
I'll tell you what I did, at least from Home Depot. I bought a grill recently at Home Depot. So I tried to help out these earnings here. It wasn't that bad there. Definitely going to be looking here at the tape to see what happens. Let's go ahead. Let's pull up the SPY. Let's see what happens.
Yeah, we got 2 minutes. I just want to mention just one quick thing here on the Home Depot. I'd like to keep an eye on high. The highs for the move are always sexy, right? You can always try and get out at 1768, but the high close for the move was actually made on Friday at 1494, and it tried to get there and it didn't. So they got a gap to fill down at 292.50. Let me spread this chart out here. I'm not going to jump the gun on the algos. It better be a good number without being up 40 handles. Let's go to the S&Ps. Let's go to the 1 minute chart. And Mitch, I'll let you guide us through here.
All right, let's get it. Let's see what happens here. Like always, we're going to try not to overreact until I at least give you the numbers. Of course, we sometimes get price action to kind of lead, but those are the algos, right? And sometimes algos can be smart. Sometimes they could be dumb. A lot of the things is understanding what the number is here. Here's the first reaction, right? Algos grab it. They push it towards the 400s. Now let's see what happens. Do we get the bid to start dropping? Look at the bid side there. Is it getting tighter?
It's light.
The offer?
It's light. I don't need to hear that.
Yep.
It's light. They popped it. I mean, we just made a new high for the move. We got to 40.38. The numbers are light. I don't even. The price action's there. It came in light. What are the actual numbers?
I'm gonna get that right
now.
It
never went to 4,000. It was steady
PPI
at 4,000
here for October coming in at 6.7 versus 7.2 estimate for the year over year. That's the core PPI. That is coming in a little bit light there on core PPI. That's a good outlook there, at least for core excluding energy. But I still haven't gotten the regular PPI number. Need to get that. I'm going to be pulling that up right now. We just got the release there from the BLS here. Just pulling it up here on exactly what happened here. So it looks like it advanced 0.2 in October and good rising 0.6, services decreasing 0.1. Let me open up the report here and get a little bit deeper into it.
Spoos are ripping. We're up 68 handles, 40.38. I can't believe I didn't leave these lines on here because we had talked about this resistance here a while ago last week. And it broke out of the resistance. And I kept on saying, where's their daily resistance here? Where's the daily high? And the next daily high is what you had before the August reading of the CPI. So if you're shorting in this area, if you're trying to fade this pop, you have to realize there's limited daily resistance here for like 135 handles. The market was looking for this. Want a good number. It's following the CPI. Whether this is just a 1 month on off, who knows? But right now, the market's reacting to this.
That's green light go. I'm in the background. That's just green light go. That's I don't think it gets faded.
I mean, this is what the Bulls need. We've been talking about. They just need stats to start helping them. The stats are here now. Feel like the Bulls have control for sure, and they're definitely taking it now.
They had control before.
Yeah, but there was still the talk, right, of maybe this is just one number. Well, now you got two numbers, right? Then you could look for the third number, the fourth. And I think at least this leaves more rally in Q4 still available here.
Yeah,
I know a lot of people are calling for turnarounds, but
so you're going to have some Fed speak later, and you're going to have whatever talking up the market and talking down the market. You're better off paying attention to what happens overnight in the pre-market session, because during the day, I mean the bantering that comes up. But let's look at some individual stocks here. Poor Warren, Apple's up a 363 at 151.94. Let's take a look at Semi. That can't be now. That's kind of had its move baked in. Microsoft, keep an eye on this 250 area in Microsoft. Major area. You had 3 tops there. You tested it again. That's what I'd be looking for. Potential target. Google moving up 294. I'd like to try and buy this on a pullback down to the mid 97s, because that's where you had, or the lower 97s. That's where you had a pair of highs before. Also, let's see how the banks. I mean, the banks are a little bit muted here. A little disappointed here. If your Bank America still hasn't reached its high of the move, and the S&Ps have 30 points over their high of the move. So that just that was just probably more of what's Kathy doing? Maybe we're more going into ARK here. Maybe this is the trade where we were going into risk. Maybe this accentuates it a little bit more. ARK is moving up. What about some of these other dogs? Zoom is moving up on this. Boom. Beyond Meat, which had been moving up, that's moving up 83 cents. I don't know. Can you find Home Depot's still down, Mitch? Can you find anything that's reacting negatively to this number?
I wouldn't see why it would be reacting negatively. If you want to take a look at what's been down lately, probably real estate. Maybe if you're looking at that, but even that's getting a little bit of a jump there. You could look at a stock like Lennar getting a little bit of a push there. Toll Brothers getting a little bit of a lift. Let's take a look at like JPM that was beaten down after hours yesterday, right? Well, that just goes to show you, look how it's already pushing back towards that 135. Looks like whoever they washed out with that move last night, feel bad for them because it's already back up there. Looking like it's trying to push towards 135.
I saw someone's put something in the chat. about some kind of deal, refinancing deal or something. I don't know if that's what if that was the move that moved it. But I'm looking at these banks, and for JP Morgan, I mean, this is just it's still pretty early. 136.17 was the high of the move. The high close of the move was 135.30. So it's just not reacting the same way. I think this is probably going to just accelerate the trade, the risk on trade and going in. Maybe the value will. It's still up for now, but look at this: Amazon over 103. What was a former high of the move?
This was the stock
105,
that
folks. Keep an
This
eye
was
on
this
105 in 104.87, 104.58. You're looking for a potential target in Amazon right there, 105. Keep an eye on that. Up 77 handles. Actually, I like to do a target, based on the 9-day average trading range. And I put down in my notes, my target was 40.69.50, which is another 17 handles. And then right next to it, I wrote, no way. You just can't predict it. Predict it. I mean, that's a target on the upside. But as I mentioned, there's no daily resistance in here. I'm not gonna call for 41.75. But Mitch, 8:36, we got our guest lurking in the background. Do you want to introduce him?
Yeah, we can go ahead and get him on. Let Gordon turn on his computer, his camera on here. Just want to make sure he's ready to go here. I think he's probably listening in. Just give me a second for him to get his camera on, and then we'll bring him on.
He's not big. He doesn't have a camera today.
No cam? Okay, that's perfect. Just wanted to make sure.
Yep, sorry.
Not a worry. Not a worry. I just wanted to make sure.
He's on the move.
He's on the move. He's on the move. Well, guess what? I'm ready to go ahead and bring on here none other than Gordon Johnson, founder of GLJ Research. Glad to go ahead and bring him on. How we doing, Gordon? Can you hear us?
Yes. Can you hear me?
Perfect. We got you loud and clear.
Hey, guys. How's it going?
Doing great.
Good. So we have you on. We've had you on over the years. And, when we had our conversation last week, you talked about, your longer term perspective and where you started your calls and stuff and where you're at now. So let's start, with the big dog, Tesla here, trying to get back over $200. Talk about, your long-term thesis, how you've adjusted it and what you have looking forward.
Yeah, sure. So, we just got news this morning that the lead times for all of their cars in China have now dropped to 1 to 5 weeks versus 4 to 8 weeks yesterday. That's despite a CNY $9,000 price cut this quarter, as well as a subsequent $1,000 insurance discount or effective price cut this quarter. So the point is, China is their only profitable and their largest market, yet they're having significant problems in that market, which means, evidenced by their lead times falling. That's number one. All right, that's a big problem. Number two, they're guiding production ahead of sales in Q4, which would mean Q2, 3, and 4 of this year, in each of those quarters, you'll have production ahead of sales, which equates to a situation we've never seen with Tesla. And what everybody says is Tesla sells everything they make. By definition, they're not selling everything they make. In fact, this is the first time ever you have 3 quarters in a row where production is ahead of sales. The problem with that is they're currently valued at more than the next 7 largest automakers combined, despite the fact that in 2021, they sold less than 3% of the cars those automakers sold. Their current PE, price to earnings ratio, sits at around just under 60 times, where the auto industry trades at 5 times. So they're valued for exponential growth, yet their growth has slowed. They're no longer selling what they're producing, and their Shanghai facility is currently being intentionally run at just 93% of capacity, and their Texas and Berlin plants are at just 10% of capacity. So they're having problems selling the cars they're producing right now at about 1.3 million cars annually sold. 1.3 cars of annual production, yet they're valued as if they're going to get to 20 million cars of sales. So there's a big problem brewing for this company that seems to be flying completely under the radar fundamentally. And when you also consider the fact that, you had week over week China sales data come out today, the growth rate fell significantly. The growth rate was around 200% the week of October 17th to the 23rd. It fell to roughly 50% the week after, 25% the week after, and this week it came in at roughly just around 20%. Their growth rate on a weekly basis in China is slowing down as well. Then you move to market share. Their market share in China is imploding. Their market share in the U.S. has flattened out despite significant competition coming, and they're having issues selling cars in China. And right now in the U.S., you can get a Model Y in 2 weeks, whereas just a few weeks ago, the lead times were well into April 2023. So the point is this, just looking at the fundamentals, we don't even have to get into the legal issues or the Twitter issue. We focus on the fundamentals. This company has significant problems versus where it's valued. And I think people just aren't looking in that. And I think they're going to be forced to look there. So what do we think the company's worth? We do a 20-year DCF. And based on our DCF, we think it's worth around $25 a share. And we think that's where it's headed.
$25 a share. That's where you're going to get a call out. And I'm definitely, we're going to hold you to that one, Gordon. Like always, we'll bring you back. I always try to bring you on here. Of course, one recent problem that Tesla had was the recall, right? The 24,000 Model 3 vehicles over a seatbelt problem. This was a real physical recall, right? I think, is this going to lead to bigger issues? Or is this just kind of the Model 3 issue that we're seeing here?
Yeah, I mean, look, I don't think we don't focus at all on recalls or legal issues. Could they be big issues? Sure. But we think what's more important with Tesla is simply focusing on the competition and their deliveries. And listen, here's the problem. The problem for Tesla is, so Tesla is expected to sell around 1.3 million cars this year. We don't think they're going to get there. We think their Q4 deliveries are going to come in around, call it 300 and let me look at our number. We think the Q4 deliveries are going to come in around, one second. We're at about 300 and, sorry, I'm trying to find our number.
No worries. Pull that number and I'll get you a question also, like a follow-up here. Once we get those numbers and deliveries, I know that you've called out this issue before. It seems like they're maybe meeting production, but not definitely meeting those deliveries that you're looking for. Go ahead and pull that number for us. And another question that I have.
In around 386,196 cars sold in Q4. Troy Test-like is at 415,000. The street is at 427. So the street said, well, but here's the point. That's not the point. The point is, they're expected to sell around 1.3 million cars. We think that number maybe is around 1.1, 1.2, but that's not the point. The point is they've got to roughly 15% penetration of the luxury market. BMW currently sells around 2 million cars a year, right? And listen, I'll admit, for Tesla to get to 1.3 or 1.1 or 1.2, a great feat. The problem is BMW is valued at 45 billion, not 600 billion. And if you put that market cap on Tesla, you're talking about like a $15 per share stock. So the point is, it's just a company that's grossly overvalued. And with respect to those who say, well, it's more than a car company, they get 95% of their revenues from selling cars. The other 5% come from a profitless energy division. It looks like, based on recent news, they're exiting, which, by the way, has negative net income. When you look at full self-driving, based on Navigant's numbers, they rank dead last. And I think that's a real risk for them. You look at their battery technology, all the promises they made at Battery Day, going to a cathode structure, they just didn't deliver on when we saw the teardown of those batteries. So they're not at an advantage versus the industry. So it's just all those narratives fall short. And I think the street is going to be forced to focus on a company that is having issues selling more than 1.3 million cars. And if that's the case, you're going to get a significant revaluation here. Okay.
So you're seeing definitely, especially the multiples kind of contracting. Now let's talk a little bit about the semi-truck. You have said on my show before that you thought that the semi-truck would never be released. Are you still in that camp?
Listen, are they going to deliver 1 or 2 prototypes to Pepsi? Sure. Are they mass producing semi-trucks? We do not think so. And we do not think they will ever mass produce semi-trucks because we don't think lithium ion or BEV trucks makes sense. So we stick with that theory. Will they, just like, they did a massive opening for their Berlin and Texas plants. Yet, months later, they're still at 10% utilization. Why did they do the massive opening? They did this huge battery day claiming all these things. Virtually every claim they made when you tear down the batteries was proven false, right? They did an autonomy day where they said they were going to have 1 million robo-taxis on the road in 2020. They don't have one robo-taxi on the road. I think that the robot autonomy day, I think by all accounts, was a disaster. So you
think this is kind of more like a press conference more than an actual release of the semi truck?
Correct.
Okay. All right. Now, one thing that I would give, and I think Dennis is trying to get in here. I'll get him in the background there. One question that I have, of course, is did you see the recent in the Halloween? Do you think Elon paid the Simpsons or something to get them in there? Because they had the Cybertruck in the Simpsons. The Simpsons, have figured out to come true here with the Cybertruck. I want to hear your questions about where you see productions on the Cybertruck going, and do you think that there was some kind of deals here with Tesla? Because also the Model X appeared in the same episode.
I have no idea, man. Yeah. That's something I don't know. That you got you.
Yeah, let's move on from that. What about the Twitter deal? What about this? The two things that kind of struck me about the Twitter deal. Number one is, the valuations in those stocks and the social media stocks at the point when he purchased them and the price that he paid certainly didn't make any sense. And then the second thing I think that surprised me, and believe me, I'm no Elon Musk. I haven't revolutionized electric cars, but I think one of the last things I would do if I was in a position like that guy who just clawed his way up is put my lot and some of my net wealth with the banks on Wall Street. And basically that's what he's done. And I just want you to talk the impact of Twitter and then the potential impact of, basically being at the mercy of Wall Street with his stock.
Listen, I don't know this for certain. This is purely GLJ Research's opinion. But we believe that the Twitter deal was announced to allow Elon Musk to sell Tesla stock. And then his intention was to get out of that deal and keep those gains. That is our view. And unfortunately for him, because it was in Delaware, and Delaware gets a lot of their, basically income from having, laws and regulations, he was forced to close. So now I think he's left with a company that, some would argue in the tech industry was worth, 20% of what he paid, and has significant issues that he now is left to fix, which is going to require a lot of attention. So that's our view. That's our take there. Clearly, it's taking his attention away from Tesla. But, we believe that people give Elon Musk a lot of credit that is maybe unwarranted as a genius, as this, production / manufacturing powerhouse, etc. We think that a lot of, in fact, if you look at their 2021 10Q, the numbers suggest over 100% of their revenue, their profits come from China. So when that China plant normalizes, we think that that contract was very front end loaded to benefit Elon Musk. We do not think his Fremont plant nor his other non-Chinese plants are profitable. That's our viewpoint. So, I think that there's some issues. I think that it's coming to the forefront. And I want to talk about I heard you guys talking about the inflation numbers. I want to talk about the inflation numbers that came out yesterday, which seemed to go completely under the radar. And what I mean is the New York Fed survey of consumer expectations for inflation. But we could talk about that after we're done with Tesla.
All right, we're done with Tesla. Talk about that. And then I just, since we got you out of rule here, I just want to get your thoughts on Bitcoin, and then we can wrap things up today.
Yeah, so, after falling 3 months in a row, consumer median inflation expectations, which came out yesterday, surged 50 basis points and are now sitting at 5.94%. And the reason that's important is because the basically commentary or the story being painted from the White House, media outlets, Twitter financial experts, Wall Street analysts, foreign media, et cetera, was that U.S. inflation has peaked, right? But if you look at age groups, education levels, income groups across all of those spaces, the expectation is that inflation is going to be up. And when you look at the actual things that people spend money on, right? I'm talking about gas, food, housing, healthcare, college education, rent. Expectations on inflation are sitting at stubbornly high levels. For instance, expectations for rent inflation 1 year out, released yesterday, up 11 basis points, sitting at 9.78%. You look at food inflation. It came out yesterday, up 75 basis points, 1 year out, expectations on food inflation sitting at 7.6%. Gas inflation surged 432 basis points month over month. Expectations on gas inflation exploded yesterday. Medical inflation sitting at stubbornly high. This is 1 year out, 9.21%. This is what consumers expect. And the issue is when consumers, have views on inflation, it's a psychological phenomenon. And once consumers expect inflation, they adjust to it, causing, prices to go higher. Then you have price hikes from businesses. Then you have higher input costs and higher wages. And if you listen to what the Fed has said, if you listen to what Chairman Powell has said in statements to Congress post FOMC meeting, or the actual comments in the FOMC statements, they have said forward inflation expectations are very important with respect to their policy decisions. And the numbers yesterday were not encouraging, yet they've gone completely untalked about. I think that's a big deal.
Okay, you know what? We're up against the clock here. We're going to have to do the Bitcoin thing another time. Gordon Johnson, GLJ Research, joining us here on Benzinga's Pre-Market Prep. Thanks, as always.
Thanks for joining us, Gordon.
Yeah, Triple D will bring you in here. Were there many offers out there?
No. The algos are so fast on these numbers.
Yeah, they're
and I
fast,
mean, this
man.
is now what I said, going into this number is if this number was hot, they were all going to say the CPI was a one-off. But because it's not, now you get confirmation that, hey, inflation is ticking down here with the PPI. We know the Fed looks at the PPI number, and that's why, the blast off has happened. You get a little consolidation here, but I don't think this gets faded. I don't think it's going to be one of those days that we give it all back and, they've looked under this, under the hood and they found other reasons. So there's money managers still caught here. And obviously, with this PPI data, it's more food for the bulls. So, Joel, you can do the technicals on this. You've done it already. We should do it again, though. We're wide open.
I mean,
that's the problem for the Bears is that we're pretty open.
Yeah, sure. I mean, the fact that we've backed off the pre-market. Oh, I'm sorry, I'm on mute. No,
you're good. You're good.
You're good. We got you, Joel.
It's just,
did he?
internet's a little
the
bit.
fact that we backed off the pre-market high. We made a pre-market. I just really keep a close eye on your pre-market highs and stuff. 50, 75. I mean, the only thing there is a psychological number, 40, 50. So just for the we backed off 15 handles. Just make sure, if you're looking for 4,100 today or my daily target of 40.6950, just make sure in that first 15 minutes that we take out that pre-market high. And then the other thing that's adding to this rally is, the way we closed yesterday. It was a very weak close. It looked like, boom, we're going to put 4,000, make that as resistance. And now we've distanced ourselves from it. Dennis, did you see any unusual? I mean, I'm looking at the banks and they're lagging here a little bit. Is just because they're migrating
banks,
more
though,
to the.
But remember the banks. The banks actually benefit from higher interest rates. So you've always got to consider that. There's the banks. It's two things here. The economy. Obviously is always an issue. And, if we get, the Fed pivoting, that does help the banks from the perspective that their businesses that they're lending money to aren't going to be struggling as much. But they still benefit indirectly from higher rates or directly from higher rates, indirectly from the other that I was just mentioning.
Saw that.
So the banks are never going to go up. And think about what the banks have been doing relative to what tech has been doing in the last month. When the PPI is light, it's a green light to Kathy. It's a green light to tech stocks. And if you look at the NASDAQ, you'll see a big difference here this morning. The Q is trading up 2.7% here now. All the NASDAQ stocks ripping higher. Amazon's up 4.7% here. Meta's trading up 2.5%. Netflix was already up with the upgrade here from Bank of America. But you look here, it's a tech rally here, Joel. So value, tech, you've got obviously money coming in, but it's focused on tech right now. So tech is going to lead. So it's not surprising that some of the value names, including the banks, would lag slightly.
Also look for growth names though, because I do see growth names moving, ARC moving
that's
with
what
that.
That's what Kathy
okay.
is.
I got you. I heard technology. Yeah. That was my fault.
Yeah.
Maybe missed a little bit of it.
I've got it's the same thing. Kathy, growth, tech, growth.
I mean,
it's a risk on market right now.
Ammo to the bulls, right? And the bears are on the run. That's the kind of wrap up there. We'll see what happens.
But with that being said, I mean, I'm not coming in here and like let's load up stocks, like this is, now we're going straight to 420. It's not that simple. We've run so far. So again, buying dips, but don't want to chase. So, we had a little dip yesterday. If you're buying that dip, you're being rewarded here immediately. It's a buy the dip market right now. Not so much sell the rip, but it is a buy the dip market. This is buying the rip this morning. So you want to be careful just saying, oh yeah, we're going here straight to 420. Nothing goes in a straight line. And if you come in, obviously just saying I'm going to buy right now, then we pull back, you can get shaken out easily. That's why the dips, it's better to buy on the dips because you're not going to get shaken out as much. When you're buying the rips and you get the little dip, then you're like already taking heat. But that's why I usually wait for a dip to buy. But this is a big move. The path of least resistance is probably still higher. So I wouldn't want to be short this market.
And if you had to do
it either.
Over under on how many minutes it would take to get to Walmart earnings on today's show, what would you have taken?
We're not even going to cover it.
We got to cover what? We don't want to
cover it.
Walmart?
Let's do it. Let's do it now at least. I think it's an important stock to talk about, so let's go towards it. EPS at $1.50, beating the $1.32 estimate. Sales at $152.8 billion, beating the $147.51 billion estimate. Walmart did approve a new 20 billion share repurchase authorization. Sam's Club comp sales increased 10% and at a new all-time high for member count. Walmart U.S. comp sales grew 8.2% and 17.4% on a 2-year stack. They did still state, though, in their earnings call that pocketbooks are stretched. People have less discretionary income and less disposable income to spend on things, so they're looking for value.
Walmart is a stock that actually holds up well during a recession too, Joel. So, this is one that if the economy goes to struggle, Walmart is one that still holds up well because people go shop at Walmart more. It's cheap. You got to eat. Got to get your clothes somewhere. Maybe not going to your fancy clothing apparels. You're going to go buy that George stuff from Walmart. So, I mean, Walmart does well when times get tougher. So, is it the stock? I mean, Walmart's just been a fabulous.
What do you guys think about Target now? That's why I was liking Target yesterday. Looks like we got a nice number from Walmart, already getting some lift from Target. Will we fill that gap?
Well, it reports Wednesday, which is always interesting. So 24 hours later, you're going to hear the bar is now raised for Target, which is an issue. And you're coming into some major resistance points here. So I don't think I'm chasing Target here either. I'm never chasing, so it's kind of predictable what I'm going to say because I don't like chasing stocks. But, I mean, you got that 180, 182 coming into that. I wouldn't want to hold it through the report. So, I mean, what if, the bar is raised now, Target comes in line and they hammer it. So we've just rallied in 4 days from Target to 152 to 180. What is that? 28 points on 152. Talking about a 20% rally in 4 days. I'm not holding those gains through the report. I'd sell it.
Walmart, two things about their report. One, they said they kind of got through the Walmart kind of worked their way through the inventory glut. And they strong armed some suppliers. So that was good news. And the other thing, the point that you're alluding to, Dennis, is they said they see an increase in shoppers that make over $100,000 a year. So I don't know if they ask you when you go in there how much you make or whatever. But so, people there are pitching, being more frugal is the word that I'm looking
Yeah.
for. Pre-market high. I'm not going to look at Target because they haven't reported yet. I mean, pre-market high. Look through, follow through on that one. If you want follow through, 149.40. There's got to be a ton of paper at 150. It's traded a ton of stock, Dennis, 1.6 million, but they got so many handles to chew through in the book. They'd be interested where the DMM gets this thing open at. I think, what do you think, 148? Because that's kind of where we're hanging here. Because you got to be finding people willing to buy this thing up $9.50. If I had to do a back test on how many times you make money buying Walmart up 7% off the open,
Not a lot
I'm
of
not sure what
times.
the results would be.
I'm not jumping into
Yep.
and chasing Walmart up 7% on these numbers. Again, it just, maybe it's paid to chase in the last few days, but overall, it's the law of large numbers. And if you're always chasing moves, and I go back to that story when I first started at Bright Trading in 1999, and we had that young kid sitting beside us, and I was just learning. I was 22 years old, coming out of college, trying to learn. I'm watching the kid, and he would just chase everything. Literally, like the stock would start moving, he'd get in, and then it would stall and start going back the other way, and he'd lose. And then he'd chase this and chase this and chase this. He was constantly chasing. And I realized, after watching him for a week, that I was like, holy man, you can't chase like that. And, my whole career basically built on that, not chasing, not panicking, that, oh, I've got to get in this, I'm going to miss the boat. That's how you lose money. It's those people that, that the market makers are making money from. It's those people that, active traders that know what they're doing are making money from. The active traders take the profits into the rips and they reload on the dips. They know the trends. I always say buy dips on stocks that are trending up, sell rips on stocks that are trending down. That's basically momentum trading in itself. So again, I'm not going to buy Walmart up $10. It's tough to make money. Is it going up 20? Maybe it's going to be that one-off, and maybe it's gonna, but then more often than not, that a lot of the gains are already in this thing.
We'll see if the market turns around. It's been
All right,
a
I'm
fun
going to
ride in
let
some
you
of these
guys
stocks.
from here.
All right,
We're
Joel,
going to
have
get
a great
Joel
one.
New Rogers. We're going to get him off
Okay,
Rogers.
you guys
get
have
him
a
new
good one,
service.
and I'm going to fix my internet today.
No worries. Have a good one, Joel. All right, we're getting Joel out of here. I'm definitely going to be watching a couple of stocks today. We'll see what happens. Just going to see how far I can ride these waves because I've been riding the wave, been renting these stocks, just playing them on the daily momentum, and it's been good for me. One that I got in yesterday, Bristol Myers. That wasn't bad. A little play there. Going to continue to see if some of these healthcare plays continue to work. Yesterday, healthcare came back into play after a hard kind of Monday action. What do you see about the value plays in healthcare?
I said yesterday I would have been buying the dips and immediately paid for that because a lot of those healthcare stocks bounced back nicely yesterday. Pfizer broke out yesterday. Obviously, it was off the Biogen and Lilly had great days, moving higher there. But I mean, those dips and the dip in Lilly lasted a day.
Yeah.
So there's still these stocks win. And if we continue to go on this full-on growth and we're going to V-bottom and all the Cathy stocks, these are going to lag. There's no doubt about it. But I feel like there's so many, paths where the drug stocks win. They're low PEs. There is some growth in some of these. I mean, the Lilly and the Biogen have the Alzheimer's wild card. It's like a call option on these things. And the stocks aren't expensive. I own Biogen. Lilly's a little bit expensive, so I don't own that one. But, I love the Biogen. I actually would buy more, but I just feel bad raising my cost basis up that much. So I don't. But I think the drugs are still buys on pullbacks. I think that trade is not done yet. I don't think it's over for them. I think the value trade is not done yet. I think we're getting, this, obviously risk on market. Everybody's in green light go. But a lot of these companies are still, if we go into a recession, a lot of these companies are still going to struggle. Those drug companies are still going to do okay. So I feel like there's safer ways to play the market right now. I like all the drug stocks.
We'll have to wait and see what happens with the call today. Of course, we'll see if we continue this rally or not. Catch us like always right here on Benzinga. We'll see you tomorrow, Dennis. Go get it, my friend. All right, let's get you over now to Benzinga TV, where we get into live trading, Benzinga Live, and of course, stock market movers. Yesterday, we went over Fryer battery play. If you guys didn't catch that interview on stock market movers, I would definitely check that out. Now, I do want to tell you guys, of course, about the Future of Crypto event. Want you guys to go ahead and check out the Future of Crypto event for yourself. Like always, this is where you guys can go ahead and catch the building. Yes, I said it, the building behind the future of crypto. I know that a lot of people are going through the struggles right now, but if you want to find out what's coming in the future, you definitely want to be here. I know I am in the camp that this could be the third and final wave for crypto. So you don't want to miss it, team. And if you guys want to check it out, I'll definitely go ahead and throw up the link here for you guys to go ahead and get towards the event. And I will give you guys a little bit of a discount here, give you guys a 20% off code here. You guys can use MoneyMitch20 for that discount there. So, of course, MoneyMitch20. Check it out, team. And check out, of course, the future of crypto.